Today, we are on the ground for day 2 of Consensus 2024, one of the largest crypto conferences in the world. BlackRock's IBIT becomes the largest spot Bitcoin ETF, surpassing Grayscale's GBTC. And speaking with us at Consensus, Lynn Martin, president of the NYSE Group, discusses the SEC's approval of a rule change to allow for the creation of Ether ETFs. Welcome to CNBC's Crypto World. I'm Jordan Smith in Austin, Texas for day 2 of Consensus 2024. Major cryptocurrencies in the green today, with Bitcoin climbing more than 1.5% back to the $68,000 level as of noon Eastern. Ether also rising, inching closer to the $3,800 mark. Polygon's Matic token, however, dropping today by nearly 3% to 70 cents. Now, Bitcoin's rise comes as BlackRock's IBIT surpassed Grayscale's GBTC, becoming the largest spot Bitcoin ETF in the U.S. That's according to the product pages for those ETFs, which show IBIT holding nearly $19.5 billion in net assets as of yesterday, and GBTC holding $19.3 billion worth of Bitcoin. Since going live in January, investors have poured billions into IBIT and have withdrawn billions from the Grayscale fund, which is a higher fee than that of others trading right now. Most of the approved spot Bitcoin ETFs have fees of between 0.2% and 0.4%, but the Grayscale Bitcoin Trust charges a 1.5% fee. Buying activity for IBIT increased recently amid bullish sentiment for Bitcoin and the crypto market at large. Exactly 1 week ago, the SEC approved a rule change that would pave the way for ETFs that buy and hold Ether. Yesterday, BlackRock filed an amended S1 form for its proposed spot Ether ETF, which revealed more information about the product. The filing reveals a seed capital investor purchased the initial shares for the proposed ETF and that the net asset value of the trust was $10 million. Now, let's bring it back here to Consensus. We told you yesterday that organizers expect about 15,000 people to descend on the Austin Convention Center. That's how many people were here last year. But that said, organizers say there are attendees from more than 100 countries, nearly 7,000 businesses, and asset managers with a collective $3 trillion under management. CoinDesk is hosting this conference, and we spoke with Andy Baer of CoinDesk Indices about what has changed this year compared to the last conference.
Last year, Consensus was in April. We were kind of looking over our shoulders, kind of just all happy to still be there. You know, we knew that we had experienced the nadir, the depths, and we were crawling out of it. But the way forward was uncertain at best, right? This idea that we would have Bitcoin ETFs, still unclear. Prosecutions, still unresolved. So compared to then, now we're in fantastic shape. We see really kind of a more well-developed, mature business, better risk management practices, less frivolous investing into silly projects. We see standards that have improved through the crisis, and that happens in all kinds of financial markets. Crypto's no exception.
All right, let's jump right into some of our other discussions here at Consensus. At this conference yesterday, the New York Stock Exchange announced a new collaboration with CoinDesk Indices to launch financial products tracking spot Bitcoin prices. Crypto World's Mackenzie Sigalo sat down with Lynn Martin, president of the NYSE Group, yesterday to talk about the new partnership and other developments in digital assets.
You plan in partnership with CoinDesk Indices to list financial products like options and track the spot price of Bitcoin. Walk me through the launch, the timing, and just how significant it is.
Yeah, we're incredibly excited about this announcement in partnership with CoinDesk, who operates the market-leading Bitcoin index, price of Bitcoin, to launch options on that index in the coming months, subject to regulatory approval.
And so I think a lot of the response so far has been very bullish, seeing the NYSE is endorsing Bitcoin in some capacity. Would you characterize this as the exchange embracing Bitcoin as an asset class, or is this really more a reflection of the blockbuster flows that we've seen through these spot Bitcoin ETFs?
We have seen incredible flows since Bitcoin ETFs were allowed to list in January of this year. I think the industry has had about 58 billion in AUM move to the ETF for Bitcoin, which is incredibly exciting. We view this as a next stage of risk management, quite honestly. If the market is looking to manage the risk associated with the price of Bitcoin, this is an excellent way to do that. And I've been saying for a while that for this industry to really move to the next level, the institutional level, you needed the traditional structures and you needed the traditional framework that are well understood by your traditional institutional as well as retail investor to feel comfortable managing risks. ETFs were the first phase of that, and we think options are the next phase of that.
And that is something that you singled out in your press release today, this wide-ranging enthusiasm from institutions in particular. I went through all those 13 Fs that we did a couple weeks back and reached out to the banks that newly had exposure to Bitcoin through these spot ETFs, and many of them were distancing themselves in terms of this being an endorsement of Bitcoin as an asset class and saying that it was more a reflection of what their wealth management clients were asking them for. So from what you're hearing, is institutional money here to stay, or is this more the product du jour for their customers?
I think we're all customer driven, and the way a traditional provider tends to think about it is transparent risk management. That is our job at the New York Stock Exchange, to provide a venue for customers to efficiently manage whatever risk in their portfolio. You take the wealth use case, for example. I can't think of a more traditional asset class in one's portfolio than U.S. equities. So the way we're thinking about it is exactly the same. If you're going to have exposure in your portfolio, we want to be a venue that enables you to efficiently manage risk in a transparent fashion.
So yesterday, the SEC implemented T+1, so a one-day settlement, a clear signal that the commission is looking to speed up the market without the help of blockchain. Meanwhile, if you talk to people from the tokenization camp, they're very bullish on this idea of trying to tokenize securities in the same way that they put asset-backed bonds on-chain. Is this a race between the two to speed up the market?
I think there's no question that the blockchain technology is transformational technology, but when you look at the equities market, you've got to consider all of the aspects of the ecosystem, every part of the value chain, from when an order is accepted by a broker, when it's transmitted to an exchange, when it is matched by an exchange, and then when it clears the exchange. Yesterday's implementation of T+1 is a great sign that newer technology is enabling us to do things more efficiently and faster. I don't know where it will go from here, but we're incredibly excited about T+1 going, touch wood, so well in the equities markets.
Would the NYSE ever consider tokenizing securities itself, or be open to blockchain tech more broadly to potentially one day achieve 24-hour trading?
I don't know. We just had a survey that we introduced to our member community to talk about the topic of 24-hour trading. And is it something that the market truly wants, or is it just a small sliver of the market that was asking for it? We're still evaluating the feedback that we got. Most importantly, though, we don't do things without consulting with our members and understanding all of the aspects of the ecosystem and the knock-on effects something like that would consider.
Now, you were just on the main stage talking about the SEC's decision last week to change a rule that would essentially pave the way for the launch of spot Ether ETFs. And many in the crypto ecosystem were excited about it, but also very confused. It seemed like an about-face by the regulator. Were you surprised at all? And has the NYSE been having conversations with the SEC about this decision?
Well, we've been having conversations with the SEC for more than 6 years about Bitcoin ETFs. I think you can't argue with the success of Bitcoin ETFs and the liquidity it has brought to the underlying market. So to me, it's just the next evolution and the next acknowledgement that Bitcoin ETFs have gone so well.
Now, Martin also explains why the NYSE has been focused on crypto as an asset class for about a decade. You'll be able to check out that full interview over at cnbc.com/crypto world. Now, as Martin just brought up, a big topic of conversation here on the ground are all the crypto ETFs getting a nod from the SEC this year. Mackenzie also spoke with Katherine Dowling, the Chief Compliance Officer at Bitwise Asset Management, about the performance of the BitB Spot Bitcoin ETF and the potential for Bitwise's Ether ETF to win approval, along with recent progress on crypto legislation.
So I think the big news of the year for crypto, outside of the all-time highs that we saw in March, are the launch of the spot Bitcoin ETFs. Really, it's just been met with these blockbuster flows, a lot of institutions coming into the space. How are you feeling about BitB's revenue so far?
Feeling good. I think, like you said, it was a huge success across the board for all of the issuers. And leading up to that, it felt very slow for the 5 years we were working on it. And then suddenly it was very fast towards the end to get over the hump and get to an actual approval of these products. And I think it's been a huge game changer for the industry to show institutions coming in, to show that these products work. Right? Like, we worked on them for so long from a research standpoint. Bitwise at heart is a research company. That is our core, and that's what we spent so many years working with the regulators to really just show them, look, here's our research. Here's how this product would work. Here's why it's going to be okay. Here's how it's worked outside the United States successfully for many years. And that was a back and forth process. And it's actually a process you want. We could have used it being a little shorter from our perspective, but it's a process you want. You do want the regulator poking and prodding and making sure that this isn't going to be, have a bad impact on the market. And as we saw, taking the academic and the research side to actuality of post-launch, they've been a screaming success. And the fact of having a number of issuers come out at once was really beneficial for the pricing for the ultimate investor, because it put some competition out there, which was a very different story from when the Bitcoin futures launched, where it was really a king-making situation, because there was one issuer at that point who still has the majority, the lion's share of the assets. So it creates a very different scenario to allow for a number of issuers to come out of the gate at the same time, which was the scenario for the spot Bitcoin ETFs.
Now, last week, the SEC approved a rules change that would essentially pave the way for spot Ether ETFs. Were you surprised by that decision?
We were pretty surprised. This is public information, we're one of the would-be issuers of a spot ETH product, and it had been many months of silence. There were no signs of life out in the ether, no pun intended. So the thought was that we were leading towards a disapproval order, and we were getting ready, we were looking forward actually to seeing that disapproval order to see, okay, well, what are the bona fides behind it? And then as a research organization, what can we do to help get the regulator comfortable? So we were very surprised to see the shift go and come over towards getting an approval order for those 19B4s.
Aside from the silent period that you mentioned preceding that decision, have you been having productive conversations with the SEC? What did that interaction look like?
Yeah, I mean, from Bitwise's perspective, we've had over the years a number of very productive conversations with the SEC. As they're learning about different products, they want to know. The SEC invites members of the industry to come in and say, hey, we're thinking about this product. So you can have that academic discussion and see, okay, well, what would be the hurdles? What would be the concerns? So over the years, including prior to the spot Bitcoin launch, we've had a back and forth with research information that we've provided, step function in response to different questions that the SEC raised over incremental time periods about concerns and how we would address their concerns about potential fraud and manipulation in the market. So we would provide our research, they would look through the research, we would respond with additional research. And so it's a very productive ongoing dialogue with regard to the research. In fact, actually, in the approval orders from last week, the Bitwise research is specifically called out, which was nice to see.
So many of the industry have said, please legislate, give us hard and fast rules so that we know how to operate within a set regulatory framework. To that end, we've seen more progress this year. So I'm thinking of FIT 21 passing the House. I'm thinking about stablecoin legislation from both the House and the Senate, seeming to be getting a lot more support than past bills that have failed to make it out of Congress. On top of all of that, you've also got Congress passing a rollback of crypto accounting rules that were implemented by the SEC. How optimistic, though, are you that these things will pass before this session ends at the end of the year?
Well, SAB 121 was that repeal went through, so we'll see exactly what happens with the Biden administration on that front. So that's a huge win, and that was like the first foot in the water. But we are seeing a sea change with the receptivity of the Biden administration towards at least embracing and having better dialogue with the crypto industry, as opposed to what the Biden administration has done before, which was really just rely upon the SEC to control the agenda there. So you're seeing the Biden administration step in response to the noise on the campaign trail with Trump making positive statements about crypto. So this is great. It's now become, surprisingly, an issue in the campaign because Trump has come out as pro-crypto and is backing that up with some good facts and forward motion. In response, you're seeing a softening in the Biden administration to receptivity to talking about crypto. The Biden administration didn't come out and say back Fit 21, but they didn't come out with as strong an opposition to Fit 21 as they did with the SAB 121 repeal, where they came out with a pre-veto stance. So you're seeing just in a very short time period, a steep decline in the vehemence of the Biden administration against being anti-crypto. So all of that is great. To your shorter question about whether we see anything happen this year on Fit 21, I don't think, unfortunately, we'll see anything with Fit 21 this year, but that's just quite simply because we're running out of time in the congressional calendar and we are in a presidential election year, which shortens it more than is ordinarily the case. However, just the fact of Fit 21 passing on the House floor, a bipartisan passage, and the number of folks that brought a yes vote for it is tremendous progress.
All right, one last thing before we go. Terraform Labs and Do Kwon reached a tentative settlement with the SEC. The agency sued the company and its founder for allegedly misleading crypto investors before the collapse of the stablecoin Terra USD in 2022. The U.S. District Judge in Manhattan asked the SEC and the defendants to file documents supporting the settlement by June 12. Last month, a jury found Do Kwon and Terraform Labs liable on civil fraud charges. All right, that's all for Crypto World today. You can check out the full interviews from Consensus over at cnbc.com/cryptoworld. We'll be back again tomorrow for the final day of this conference, and we'll see you then.